Welcome to the Festival of Entrepreneurs, recorded live at the NEC in Birmingham. Over the next few minutes, you'll hear from some of the most incredible founders, investors, and business leaders who joined us this year.
Cool. Well, we're going to talk about some of the strategies and tactics. I know that everything's run over a little bit today. I know people have got to shoot off to get trains and cabs and probably helicopters for some people and get to other stages and stuff as well. So we will be short, sharp and punchy and to the point. So let me introduce my guest first and foremost. We've got Darren from WholeSupp. We have got Kosta. I don't know why I did a weird accent for that, sorry about that. Kosta from Empact Ventures. We have got Daniel from Revival Shot, and we have got Raj from Hytro as well. If you don't mind, and we're going to start with you, Raj, first, if that's all right. If you could just give us a little 60-second summary of you in the business and how you've kind of scaled to where you're at right now, so we've got a bit of context.
Yeah, no problem. Good to meet everyone. My name's Raj. I'm CEO and co-founder of Hytro. We are a human performance company pioneering blood flow restriction wearables. Oh, is that okay? So most of our products enable athletes to perform better and recover faster. So we work with over 300 pro and college sport teams across the world, alongside the greatest athletes on this planet. Off-planet, we've done some work with NASA and SpaceX, so we've been into space twice, once on the Polaris Dawn mission last year, also on Fram 2 earlier this year. Just very quickly, my background started in corporate world, banking, management consultancy, and then spent the last 7 years in startup life.
Amazing. Not many people who can go, I've been to space twice. Anyone else been to space? No? No, okay, fine. Of course you have, Pete Cohen, I don't doubt it for a second. Daniel, give us the summary of Revival Shots, please, my friend.
Yeah, absolutely. So my background's also corporate. I was a banker for the first kind of 7 years of my career. 8 years ago, started Revival, which is a hydration brand. So electrolytes, vitamins, all mixed into a stick pack, which you mix with water and have a lovely drink to make you feel good. So we service anyone from people who drink a lot, elite athletes, and people looking to cut out Red Bull and Hytro, coffees and stuff like that, a more natural way to get energized. So our business is, I'll say, largely 99% is D2C in the UK. We're looking to expand into Europe in the coming months and also into the Middle East also.
Amazing. Costa, like the coffee. I don't say that. Costa, Empact Ventures, what do you guys do?
I don't know if this mic's on.
Is that mic on? We're on.
Can you hear me?
We're having a technical nightmare.
Oh, there it is. It's on. Hi everyone, my name's Kosta. I'm the founder and CEO of Empact Ventures. We are super connectors. We facilitate thousands of connections between startups, scale-ups, investors, corporates, decision makers, and business support. We run tech conferences around the UK. We run a global tech for good competition. We run a series of pitching events. And our job is genuinely to connect people based on mutual need. We stay involved in every email chain and we help both sides get to an outcome, be it economic and be it financial, a deal, investment contract, or be it social impact and be it a charity getting sponsorship or otherwise. So that's me.
Awesome. Darren.
Yeah, hi everybody. My name is Darren O'Reilly. I'm the co-founder and CEO of WholeSupp. WholeSupp is a high-protein superfood meal shake. We've been fortunate enough, trading just under 3 years, delivered over 450,000 meals across the UK and Ireland and to 28 other countries. My background was I was a professional rugby player, moved into the corporate world, into digital transformation, lost 20 kilos in weight. That's where the aha moment came up for the product, because a lot of people in my position were trying to live high performance lives, trying to climb the corporate ladder, but ultimately their nutrition let them down. So we were saying within our business, if your foundations are strong, your potential is unlimited, and that's where nutrition starts.
That is a great tagline. Anyone else think that's a good tagline? I wish I could come up with that myself. Right, again, I think there's a big difference between growth and scale, which we won't dive into too much here. But Raj, we'll start with you. When did you actually know that you had something that was worth scaling and you weren't just running something? So I think there's probably a moment where you're like, oh, this is going to go, and it's going to go quick.
Yeah, when people talk about that, they talk a lot about product market fit and the classic metrics that go alongside that. So, retention, word of mouth, revenue. But actually, for us, it was slightly different. And people often don't see investment as a way of thinking, oh, it's going to scale. Investment's often a red herring. But for us, the turning point was we started selling to NFL teams, for example. And the first NFL teams we sold to were the Atlanta Falcons, Washington Commanders, and Buffalo Bills. And not only did the coaches buy product for their teams and love that, they then invested their own money into Hytro itself. And actually, we have over 100 pro sport athletes and coaches invested in Hytro, and that shows unbelievable advocacy and belief in our product and what we're doing. So we've got coaches across the world who open doors for us, and we've actually got high-profile athletes, Formula One drivers, Premier League players like Jurian Timber, Sam Wolverton, rugby legend, Kosta Mavroulakis plays for NFL, and many more. And that's a great sign for us that we're on something.
What was it, just to follow up on that point, sort of that investor model, rather than going and raising a big fund from sort of VC or from a PE house, what was the catalyst of going, why don't we take on sort of more micro investments from those stakeholders?
It was almost by accident in many ways, because originally you go, let's go to the VCs and get big checks.
Yeah.
And then, we're a hardware company, it's quite hard at early stage when you haven't got real revenue. And actually we had all these coaches and we thought, that's our community. That is the fundamentals of Hytro. It's actually built on the pro sport coaching community and athletes. And so let's bring them involved. So we did a private crowdfunding round as well. So just for them, to get more of them involved. And it's incredible for how it helps the brand as well, and how we just get everywhere. Because you'll end up with a coach at Nebraska University speaking to a coach at Atlanta Falcons in the state, going, this is phenomenal, look at this product. And then they all start investing as well. Yeah. So it ended up being kind of almost by accident, a brilliant strategy for us.
Yeah, nice. Daniel, how about yourself?
I guess for me it was probably the point in which we hit that first million, but more importantly, not just the first million, it was we were able to do that at profit. It's very easy now for people to get lost in the noise of business, and I know a lot of entrepreneurs who are just chasing growth, and I think that's the distinction you talk about. And growth without that profitability is nothing, because eventually it's going to lead down a path where your business isn't sustainable. So when we hit that first million, that was a massive kind of tick box for the company and a massive kind of validation of what we're doing. But to get there with profitability, we then knew we had something which was scalable and growable. So that was the point of inflection for us.
Nice. Darren, how about yourself?
Yeah, look, it's a really interesting question. I think we're definitely in the middle of what we feel is a pretty scale-up journey at the moment. But I think the confidence we had to walk away from institutional funding and go back to strong angels and strong family offices was an indication that, one, we had a very strong business because of the level we needed to raise, but then two, also, we have a 71% return customer base, which is over double the industry average. So we know, back to the guy's point, that we have really strong foundations. So ultimately, when you're able to scale profitably, turn away for us institutional money because of valuation and other different terms that we weren't overly happy about, that felt that was our inflection point, and the growth hasn't changed, even though we didn't take on maybe a little bit more investment at the time. We're still in a very controlled manner, yet doubling down in everything we're doing.
So, Kosta, coming to you then from the sort of the other side, we're talking, sort of gamekeeper or poacher. Don't know which one you are in this instance. Maybe a bad analogy. I wish I hadn't gone down that road too late. I've done it. But when you're looking from the other side, or when you're making those connections, what are the signals that a business is fast growth enough that actually the investment will help them scale, rather than it just being money that pays a director's salary? What's the sort of the key signal that you're looking for?
I mean, a lot of it is you can see that they finally figured out that product market fit. They're getting some traction in a key area. Their product is kind of nailed down. It's not a prototype or an MVP. It's an actually full product, and people are buying into it. Bigger enterprises are wanting to buy it rather than pilot it or partner with it, etc. And there's kind of a building wave that's coming that they lean into. It might be something out there that's happening politically, geopolitically, etc. And they're leaning into that, and they're getting kind of that traction, whether it's through customers or following, etc. And there's going to be that tipping point where they're going up, if you will. So those would, I'd say, the key things.
Is there still, because I'm hearing you saying that, is there still then a little bit that's done on gut intuition? Because there isn't almost like they've got growth, they've got returning customers, to Darren's point, they've got product market fit, there's a sentiment in the marketplace, there's great branding, great positioning. Do you still have that element of you have to sort of trust your gut and your intuition and go, I can't put my finger on what it is, but they've got the X factor that's going to make this go?
You probably hear that investors invest in people, And sometimes you have all those factors, all those signals, but the people, you can tell, can't, you don't think they can execute it, or their attitude towards it, or they're not humble, and they're going into it for the wrong reasons. You go into it to change the world, to make an impact, and they're just going into it for the wrong reasons that an investor or a partner wants from that. So I think the people element, it is led by gut. I think that kind of de-risks a situation, whether it's an investor or whether it's a corporate wanting to deal with a company on a contract, etc. It's the people and the team and how they gel, and can they get that customer acquisition and take it to market.
Have you had, final one for yourself, have you had a situation there where all the signals are there, like every metric you look at is there, but the person, you just don't vibe with the person? For me, that's still 99% of it saying go, but 1% of you, which is the biggest indicator of the person, you're going no.
Yeah, absolutely. I mean, it's being led between your heart and your head, and you have to follow your heart in this thing, in this situation. Depending on what the relationship is, if you're the investor, if you're partnering, if you're going to be representing somebody and being their super connector, etc. If your gut is telling you this doesn't feel right, or I don't like the way they do business, they're not responsive, I'm hearing they're not paying their bills or not paying their suppliers, etc. All those things, because if you're representing them, it's going to be a reflection of you as well and your business.
Daniel, how do you balance? So I think again, we talked about everyone's thinking about the fundraising, the sexy, exciting bit. You've been out, whether it be PE houses or private family offices or whatever. Everyone wants the deal. Everyone's hungry for the deal. But has there been a point within what you're doing within Revival Shots where the scale is almost too quick? You're like, geez, the back end can't keep up with it. So you've got so much front end sort of movement, which from the outside world looks amazing, but back end, everything falls apart.
Yeah, absolutely. So as a company, we've never taken external finance. We've actually never taken a penny of debt either. So it's all been kind of retained profits.
So you're fully bootstrapped still now?
100% to this day. I still own 100% myself. So that, it's good. I own the company, fantastic. But obviously that comes with challenges. And the main challenge that any business faces when they're in kind of what we call hypergrowth, 100% plus year on year, which we've achieved every year since inception, it comes down to cash flow. And that's so difficult to manage. You're stuck between having enough money to pay payroll, buy the ads, buy the equity in the brand, be that in PR, be that with affiliates, and then also making sure that you've got enough stocks to sell. And unfortunately, in the business that we're in, you have to pay the money up front for everything. That's the stock and for the brand equity, for the PR, for the advertising. But realistically, in this day and age, you're not profitable on your first sale. So you have to wait a long time to get that money in. So the cash flow is the biggest challenge to manage that. And especially that's compounded once you're in that kind of very high growth stage of the business, which we're typically still in. I think we're at the back of it now because we've built up our cash flow and we've kind of got enough reserves. But in the early days, it's a juggling act, which is very difficult. And if you get the balance wrong, that could be the difference between success and failure.
So if you haven't taken on sort of institutional money, who have you looked to work alongside? Is it sort of invoice factoring and stuff like that you can do to support cash flow? Have you literally bootstrapped it out of the cash in the till, so to speak?
We've done none of that. It's literally out of the cash in the till.
Wow.
So yeah, in the early days, ads were slightly cheaper. We are helped by having a very strong gross margin. We're about 92%. So that certainly helps. We've also done a lot of work to kind of shorten the repurchase window, build up our AOVs. But yeah, it's been challenging. Very challenging.
What's the cash cycle then? So you put £1 into buying the product. Is it sort of, you're looking at a 4 or 5 month window before that recycles into cash flow, positive cash flow?
It depends, right? You have to pay the stock up front, of course. Yeah. So that goes on day one. You then have to pay the ads to get the customers in the front door. Typically, you're probably going to break even on if you don't account for COGS. If you account for COGS, you're definitely down. We hope to make a profit off of every customer within 60 days. So You've got 60 days of terror, where you're kind of holding on for dear life. If you can get past that, you're making profit. And if you can rinse and repeat that, post that period, every single customer you get into the front door after a 60-day period is then paying you good returns on the money that they do.
That is scary, because again, in this VC world, have to put out money today and not see it until, in this instance, you're not seeing it till Christmas.
Yes.
That's a long time when you're bootstrapping on cash flow, isn't it?
It's very tricky, and
Yeah.
you've got to be very confident in your business, but also into the kind of unit economics and the MER. So MER is something that we lean into heavily, which is basically LTV divided by CAC. It basically tells you how profitable you are going to be for every pound that you put into your marketing machine. And you've got to have absolute confidence in that to be able to lean into this model. Otherwise, it just doesn't work.
Yeah. What about yourself, Raj? Was there ever a time when the scale grew so quick, or there's all these college football coaches going, yeah, we want to stick some money in, and then you're like, well, I haven't got the back end, I've got to build the product out?
Yeah, well, firstly, that's really impressive, by the way.
Did Daniel just become my favourite entrepreneur?
Yeah.
Wow.
How did you do that? Yeah. I mean, from our point of view, like, cash flow is one of the biggest problems you have, and we have a similar thing where you buy product up front, and then you get the money down the line when you sell it. And we had particular problems with we started to grow into the NFL market in the US, and the NFL guys are a bit bigger, so the product size, they just took out a whole load of SKUs when we started taking more traction. So we ran out of stock quite quickly.
Starts at quadruple XL. And
yeah,
goes
exactly.
No smaller.
Literally, that was the order the next day. Like, we need more big stocks. We're out, and we need more cash to do that. So we're constantly in a kind of cash flow crisis for that. And so that's why we've done external funding. We're now VC backed as well, because we have scalability, so we can be VC backed. But cash flow all through the year has been an absolute nightmare. You'd be on one day we'd be like, we're going into space, like we're watching the launch and it's fantastic. The next day I've got to pay payroll and I haven't got enough money in the bank. So it's that contradiction.
Go from cheering to crying.
Yeah, exactly.
Yeah. I think that's the challenge with all businesses, though, isn't it? Because I don't think it matters whether you listen to Ray's story or anyone who's got a smaller business. Cash flow is always relative, isn't it?
Yeah.
I've got a friend of mine who does 50 million quid a year, and I've got other friends who do 50 grand a year. But the cash flow is that pinch is as painful. It's all relative, I think. Darren, yourself.
Yeah, like this is a daily, weekly challenge because look, at the start when you launch, you're looking to get your MOQs as low as possible and then your payment terms as long as possible. That's great. But then when you get scale, you're trying to organize inventory, ingredients, then you're looking at the different sales channels. So like we launched into retail, so nationwide with Holland & Barrett, then you take on a new sales channel like Amazon. We've been on there for a couple of months and now that's taking on. So ultimately, the biggest issue for us is stock management and then ensuring that our contribution margin is always remaining where we need it to be. Being predominantly a digitally native business, the cost of acquisition is getting ever more expensive online. So you got to look at how you use these tools. So, for example, won't go into our full marketing strategy, but we use Meta now more as an awareness campaign, use Google as a capture, and then you can just look at Amazon as just search intent because everybody who's on the platform is looking to purchase. We've built up enough credibility that now when we go into retail, we're able to get stock pulled and now we're outpacing forecast. So that's a really good thing. So the problem that we have is really just having confidence in our forecasting that we're going to be able to achieve that, but then also putting a little pressure on our manufacturers to be able to deliver and then try push the payment terms a little bit because they're seeing our scale to help us out. As a challenger brand, that's the main thing. It's like everybody else's problem, it's cash flow and then payment terms.
And those two things combined, it's basically going to the manufacturer. Can we have a little bit more, but can we pay a little bit less, and can we pay it a little bit further down the line?
Yeah, but like, look, these are challenges that they want you to be coming to them with.
Of course.
Because if you're going to them going, oh look, have stock running out of date, they'll be tearing their hair out going, why do we give you time on the line? So where they get efficiencies in their supply chain is how long they can run a factory line for without changing a product. So if you go for a bigger run and you say, right, we'll give you 20% now, 30 days time, we'll add on X, 60 with complete payment. Like that's a partnership. And if you're growing at the pace that we are, that's what they want to be engaging in. And we're very fortunate to be able to get that. But it's a lot of give and take at the start.
Yeah, absolutely. Costa, I know that you've got to shoot to another panel just shortly, which won't be as good as this, so don't go anywhere. Everyone, just stay where you are. Final question for you before we have to shoot off. We've talked a lot about the sort of the how you're structuring. In terms of the who, when you're looking at whether it be like you say, super connecting people, whether it be sort of investing, or when you're looking to bring those partnerships in, What is who is in that team that you're looking for? Yes, you need a great visionary founder, like we heard from Ray earlier, but you do need a great CFO, you do need a good CMO, you do need a good C-suite. Who are your core people where you think the business is there, the scale's there, the drive's there, you can see it's going in the right direction? Is there a key 5-person team that you're going, I need that before I can really invest in you?
If it's tech, you definitely want to have a CTO that is either full-time or has at least 30-40% equity, that's bought in, that's going to be on that journey for 3 or 4 years. You might get worried if you have an external development agency and it's that is the long-term solution, because you want that IP to stay in-house. So you want somebody that can answer those questions when you're raising investment, and the investors are doing technical due diligence and they're asking all sorts of questions about what IP and how the algorithm works and so on. So definitely the CTO. Obviously, if that's tech, that makes sense. But if it's not tech and it's product development and you need somebody that's a specialist in that area, whether it's product testing or somebody that does the science. If it the unique thing that makes that product go, if you will. Definitely on the customer acquisition side, because founders tend to pitch a big vision. This is what we're going to achieve to investors, and actually when you get to the latter stages of due diligence, then they want to look at the strategy. Well, how are you going to achieve that, and who's going to do it? You can't do everything. You're the founder. How are you going to raise investment? How are you going to oversee the product development side of things, the strategy side, and how are you going to do sales? So it's looking, do they have a chief revenue officer or a business development director that's going to go out there, and that is just their job. But I'd say what is super key is having like a rock star advisory board. People on your board that maybe it's a loose setup, and you're just, as a CEO, you're just talking to somebody once a week, once a month. But 3 or 4 people at the very minimum, 5 to 7, it has to be an odd number, that can open their little black book, can open their connections. So you'll have the person that can open the network. You'll have somebody that's the cheerleader who is very high profile in that industry, and just posting something on social media will get a lot of followers. And then you'll have somebody that's quite unknown but is an operator, can work with the team, can mentor the team, and that's how I'd make that up beyond the CEO.
And if, for example, you come in and you see that there's a tech-based product that's amazing, but because they only know what they know and they can't see the blind spots because they don't know they're there, and their longer-term goal or their longer-term mission is we're just going to keep outsourcing it, and you guys come in and go, well, that's not investable. Will you support them sort of over a 12, 18-month period to sort of take it from out of house, in-house, and go on that journey with them in a sort of an advisory role? Yeah,
of course. It's getting that transition to make sure, if they've only got a part-time CTO, it's going on that transition to get a development partner that comes in for a year or 2 or until like a first raise. And when the investments come in, it's working with the rest of the investment team, recruiting the right people and kind of doing that handover, that transition, and building around that person that comes in and keeping the knowledge within the company. Still having that development team maybe on the side that can do very specialist things, can do quality assurance testing, etc. that a CTO probably can't do because there's so many areas of QA. Unfortunately, I'm going to have to go because my session's going to start.
Yeah, no worries. So where can people find more information about Empact if they want to find out more?
Yeah, just go to Empact with an E, so Impact with an E, .ventures, and there's all sorts of events, and there's a form at the bottom you can get free connections on, so yeah, feel free to fill it in. But yeah, I'm going to have to head off.
Awesome. Cheers, Kosta, give a round of applause, please, everybody. Thank you. Has there been any unexpected bottlenecks? We'll start with yourself, Darren. For any unexpected bottlenecks to the growth, and then how you solved it? I guess it's probably cash.
Stock is the biggest one. Unfortunately we've sold out of stock a number of times.
Have you?
Yeah, and it's killer because basically you're starting your new customer acquisition from start. So like with our business, we have a subscription model. So really the lifeblood of our kind of monthly recurring revenue is all about that repurchase rate, and when you run out of stock, it's killer. So
what is that like? The day you come into the office, you're like, it's gone. Like we haven't got it.
usually what happens is
Everyone goes home for the day. No,
usually what happens is you see it's coming, so you're trying to do everything you can with your co-packer to ensure that.
How far in advance do you see it?
You'd see it a couple of weeks in advance.
Is it? Okay.
Because our product, there's 13 superfoods in it, so 13 whole food ingredients and 30 vitamins and minerals in there. It's complex enough product, and supply chain is what it is. So when you get let down, it's really frustrating. But like then it's just like, okay, damage limitation. How can we get a run done over the weekend? Can we get a shorter amount of stock just to fill the gap? And that's the bottleneck really at the moment for us. It's, in one way, it's an amazing problem to have, that we have a product that people want, but in another way, it is heartbreaking. It's probably the easiest way to say it. So, look, you live and you learn, but the mistake has happened more than once, so it's a bit of a frustration.
The mad thing with you, though, is that you don't just have customers, from what I've seen. I was doing a bit of digging online, like you have absolute advocates, like Alex, for example. He absolutely swears by it.
Yeah.
We'd never go to anything else. I suppose that by building that brand advocacy, you can kind of protect for that sort of stuff.
And you know what? It's amazing. And like when we know this is if we foresee this coming, we block off stock just for our subscribers because of that. And like the reason why you try to get close to your customers, like the lads no doubt will say, is the closer you are with your community and your customers. Like we host a number of events so that we get to meet them personally or give them advisory, access to like educational content all the time. But if you run out of stock, you run out of stock. It ruins their routine, and like this is an habitual product that people use on a daily basis. So that's the bottleneck at the moment. But we'll continue to serve and figure out how not to let it happen again.
Awesome. Daniel, final question for you. Same thing, bottleneck?
Yeah, I mean, you know, just to echo the comments, I mean, I guess stock has been the biggest killer for us. If you go on our website today, our 5 best-selling products, they're all sold out. We had a phenomenal summer.
Makes me feel somewhat better.
Yeah. No, it is heartbreaking, right? Because you're leaving cash on the table. So it's very, very challenging from that perspective. We still consider ourselves to be a startup brand. You spend so much money to acquire the customer. They come in, they find their favorite product. The next month, when we're trying to get profitability from this customer, they come back online and their favorite product's out of stock. And one of the challenges with that is we can't predict how quickly we're going to grow. And because we're in this 100% year on year, we plan for that and we double the stock that we order every time. But you almost you're finding yourself for doing better. So the better you do, the quicker you sell out your stock, and then you can't get it quick enough, and you end up in a situation like we're at today. And the problem is, back in the day, it was a bit of a kick in the nuts when you're out of stock. You're losing a few £100 a day. When we're out of stock, certain times you're talking tens of thousands of pounds a day until you're back in stock. So it's savage. It's one of the things that we've struggled with for many years. We're trying to get better at it, but clearly it's still a problem that we're facing today.
In those moments, do you not think now's the time to bring in external money, because that will solve the cash flow issue, because you can do those bigger runs?
You're really pushing raise, aren't you? You're pushing a raise.
Maybe it's coming. It's not so much a cash flow issue. We could go crazy and we could order 10 times what we're doing. The problem is we can't make it quick enough. So we've just moved supplier. That's taken about 6 to 8 months to go to a supplier now who can do about 4 times the output, so they can do 150,000 sticks a day. The problem you've got is we've got so many SKUs now. Even if you took every one of our SKU, and you can't run a single flavour daily, you've got to make it profitable, you've got to run it for 3-4 days in a row. By the time you start our first product, which just says orange, and by the time you've done everything else and get to the orange, you've almost a month's gone. And then you've got to get it co-packed, and so it's not just a case of let's just order more. You've got to do it in a sustainable manner, which we're getting there. The new suppliers helping, the new co-packers are helping, but unfortunately, it's not a problem that you could just throw money at to solve. Unfortunately.
Gotcha. Final question then, Raj, for yourself. How has your role changed with scale? Because obviously the role of a founder for a smaller business is very different from that of one who's going through scale up, especially when you take on venture capital and then all of a sudden you've got a lot of direct reports who want answers and graphs and sheets, and why are we not going up and to the right? So how's the role changed?
Yeah. So the evolution really is to get away from the doing and to more of the thinking. And so that's what you're hiring people for. So I've got a brilliant COO now, a brilliant CFO, and they can take more of the ownership of the day-to-day activity of the business. It frees me up to think more about strategically about where we need to go, the vision, the mission, and so on. There's also just an element for me of kind of more efficiency as well. So the guys like the CEO and CFO are better at doing what I was doing, and that's how you should be hiring. But then you've got the people management aspect, which is it's quite onerous at times, and you've got to find quicker and better ways of doing that, because I've got like 11 direct reports at the moment, and that takes up a lot of time for me. So there's a challenge from that. So you're not doing the work, but you're having to overseeing it. So I'm trying to look for better ways of structuring it right now, so I don't have to have so many one-to-ones and keeping everything running. But it's very much more thinking time, and I think this, Jeff Bezos said it, I saw in an interview a while ago, it's like, as Amazon got bigger and bigger, his role was less about the doing, and it's more about making important decisions. And as he went further, with fewer and fewer decisions, but it was more and more impactful. So that's the way it seems to be going for me as well.
What's the one thing that you struggle most to get rid of as the founder? You're like, I love doing that bit, or is there one thing you're like, I could do it better than that person?
No, I would say I'm trying to get rid of as much as possible at the moment, to be honest. Like, particularly, I have a background in finance, so I was doing all the finance stuff, but I'll gladly pass it to someone else who I think is capable. Some of the challenges where you hire and you don't get it right and they can't do the job as well as you could, and that's a problem. And I've had that a few times where you then have to step back in, and that's really infuriating many times, but then you have to solve a people problem.
Amazing. Well, I hope you guys have all enjoyed this session very much. I definitely have. I've learnt some stuff. Daniel became my favourite entrepreneur of all time today. No offence to everybody else. But Raj, Daniel and Darren, everybody, thank you very much. Give me a round of applause.
Thanks for watching this special episode from the Festival of Entrepreneurs. Our mission is simple: to help founders and business owners grow faster, think bigger, and take action. And if you were part of the event, thank you for joining us and being part of the community. And if you missed it, don't worry. We'll be back with even more ideas, inspiration, and opportunities to help you take your business to the next level. You can find out more and register for future events at festivalofentrepreneurs.co.uk.